Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Welcome everyone to Uncle Frank's Flaming Swan edition, just in time for AMC earnings and our overdue annual shareholder meeting. Those of you that follow this channel know that I believe only a black or white swan event will force our enemies to a decision on terrorizing our stock. Yes, it can only be a sudden shock to the leverage chain within the portfolios of the predatory short hedge funds that will turn their prime brokers against them. I have proven that they are currently working together to avoid a catastrophic event while regulators stand by and do absolutely nothing. AMC senior management, while doing a good job running and developing the company, is overseen by Morgan Stanley and strictly follows the advice of Citi, our chief investment banker, and they've been careful not to say or do anything that might adversely affect the interests of Wall Street, especially since these two companies, Morgan Stanley and Citi, have billions in unrealized losses and billions in securities sold yet not purchased. Well, all that BS might be coming to an end as the Swans appear to be closer to landing. Let's start this one off with notes from Bloomberg's evening briefing. Fear is everywhere. Fragile markets, shadow lenders, international tensions, and too many wars. This is about the big meeting in Hong Kong. Global bankers gathering in Hong Kong were meant to discuss how they're adapting to the financial world's complexity, but ended up dwelling on the potential for big blow-ups instead. Deutsche Bank CEO said, "My biggest fear is there's one more geopolitical escalation and then a market event." Also, U.S. officials will seek to limit access to the federal home loan banks after failing lenders turn to the $1.3 trillion system in desperate bids to survive March's regional banking bloodbath. Also, the commercial real estate crisis finally claimed a widely expected victim, WeWork. At its 2019 peak, the office space disruptor commanded a $47 billion valuation. Now, in its bankruptcy filing, it lists $19 billion of liabilities and just $15 billion of assets. Guys, you can't swing a dead cat right now without hitting a swan. And more detail on the WeWork bankruptcy, the filing capped a swift downfall for the standout, once worth $47 billion, costing the SoftBank CEO $11.5 billion and his credibility along the way. The termination of dozens of leases will challenge landlords in San Francisco and New York City, where WeWork was once the biggest private office tenant. The co-working firm joins the ranks of other failed SPACs, and it's an alarm bell for holders of CCC-rated bonds. U.S. credit card delinquencies are rising. Increase is driven by people with auto and student debt from Bloomberg's The Close. U.S. households tapped their credit cards more in the third quarter, boosting economic growth. But millennials and people with student debt and auto loans are falling further behind on payments. Balances are now $154 billion higher than they were a year ago, the largest annual increase since data tracking began in 1999. Do you guys remember the article, Bank of America Increases Short Position in AMC, written by Frank Nez? Well, I do, and I've got a new headline for you from Markets Insider. Bond market crash leaves big banks with $650 billion of unrealized losses as the ghost of SVB continues to haunt Wall Street. From the article, it's a sign even Wall Street's best-known names are feeling the heat from the Treasury market rout. Crashing bond prices sank Silicon Valley Bank earlier this year, and there may be more chaos to come. Burn, B of A, burn. More detail from the article. Moody's estimated last month that U.S. financial institutions had racked up $650 billion worth of paper losses on their portfolios by September 30th, up 15% from June 30th. The rating agency's data still doesn't account for a hellish October, where the longer-term collapse in bond prices spiraled into one of the worst routs in market history. Bank of America is the big lender worst affected by the crash in bond prices, having disclosed a potential $130 billion hole in its balance sheet last month. The other big four banks, Citi, JP Morgan Chase, and Wells Fargo, have also racked up unrealized losses in the tens of billions, according to their second and third quarter earnings reports. Do you remember the headline, Citigroup has been shorting AMC for over a year, again from Frank Nez? Or how about this one, AMC price prediction. Citi claims AMC Entertainment is worth less than $5. Citi reiterated its sell rating on AMC stock. Well, I've got some new headlines for you. Citigroup boss Jane Frazier's Project Bora Bora could reportedly see 10% of staff laid off at the Wall Street giant. The banking titan could lay off thousands of staffers. And here's an unsettling headline from today. U.S. and Russia on brink of World War III as NATO rips up Cold War treaty preventing total war. From the article, Russia has ripped up a landmark treaty limiting the amount of conventional forces Moscow and NATO can place in Europe as tensions soar to a point not seen since the Cold War. And a headline from Fox Business. 401k hardship withdrawals are surging as high inflation squeezes Americans. A growing number of Americans are making emergency withdrawals from their 401k retirement plans to cover a financial emergency amid chronically high inflation, according to new data from Bank of America. About 18,000 workers taking part in employer-sponsored 401k plans made a hardship withdrawal during the 3-month period from July to September of this year, according to B of A's analysis of client employee benefits programs, which tracks about 4 million accounts. That marks an increase of about 13% from the end of June and 27% from the beginning of the year. And from MarketWatch, the Social Security crisis is a bipartisan outrage, and it's way worse than Lehman Brothers. This is a massive, bipartisan, $22 trillion disaster. It's a crisis that could have been easily avoided and should have been. Burn, Washington, burn. And again from Markets Insider, U.S. debt interest payments surge past $1 trillion yearly pace, worsening concerns about massive borrowing. The U.S. annual debt interest payments crossed $1 trillion in October, according to a Bloomberg analysis. The cost of debt has doubled in the past 19 months as federal deficits balloon. High interest rates have made borrowing more expensive, adding pressure on U.S. debt. And from the Wall Street Journal, Robinhood stock falls after revenue misses Wall Street expectations. Shares of Robinhood dipped about 9% post-market Tuesday after the company reported revenue that missed Wall Street estimates. The company posted a net loss of $85 million, or a loss of 9 cents per share on revenue of $467 million. Analysts were expecting a loss of 10 cents per share on revenue of $480 million, according to FactSet consensus estimates. Robinhood spent $104 million in the third quarter resolving regulatory issues, which it disclosed in September. A drop in trading revenue weighed on results. Net interest revenues nearly doubled year over year to $251 million, while transaction-based revenues decreased 11% to $185 million. Burn, Robinhood, burn. We learned today from MarketWatch that the S&P 500 and the NASDAQ recorded their longest winning streaks in 2 years. Last week, though, hedge funds were caught in crowded trades and suffered in Thursday's stock rally, according to Goldman Sachs. Turns out last Thursday was the worst day of the year for the hedge funds because they got caught short in this rally. And today from Hedge Week, month in review, U.S. equity slide hits hedge funds in October. Burn, hedgies, burn. And a white swan for us may mean a black swan for our enemies, a headline from Tuesday night. SAG-AFTRA and studios achieve AI breakthrough. More negotiations set for later Tuesday. And from Vanity Fair, the AI issue in the SAG-AFTRA strike may have finally been resolved. It would be great if we hear that the actors' strike is finally over during our earnings call. I've seen nothing but good news for AMC lately, and today was no exception. Nintendo is making a live-action Legend of Zelda film on the heels of hit Super Mario Bros. Movie. I went to ProxyVote.com today to vote for the meeting, and I wanted to share item 5 with my viewers. Proposal to amend the company's third amended and restated certificate of incorporation to expand the exculpation provision to limit the liability of certain officers. Of course, I voted against that, but my question is, why do we need to limit the liability of certain officers? So Frank, how you feeling about the earnings so far? I'm feeling great. I think we're going to do fantastic. It's the Barbenheimer quarter. I'm wondering who's going to kill the rally if we get one. Over the last 3 sessions, I've seen them manipulate and control the stock at will. I just want to see them do it when a real crisis hits and the primes have had enough of what they've been doing to us. As far as the earnings go, I feel the same way I did last quarter. In the last reported quarter, the company's earnings and revenues topped the Zacks consensus estimate by 100% and 4.5% respectively. Also, the bottom and the top lines grew year over year. AMC Entertainment's earnings remarkably topped the consensus mark in the last 4 quarters, the average surprise being 44.2%. We have an incredible runway of events for November, culminating with Beyoncé's movie dropping on December 1st. Going backwards through the calendar, we have the Thanksgiving holiday, and the reason I mention it is I read a report that 43% more people were planning to visit the theaters over this holiday season than last year. Then on November 22nd, Sony will release Napoleon and Disney will drop Wish on the same day. Then, Friday, November 17th, Trolls Band Together, the new Hunger Games, and a horror film called Thanksgiving is going to drop. Friday, November 10th, the Marvels and the Veterans Day weekend. And then Thursday, November 9th, international advance tickets go on sale for Beyoncé. The reason that's important is we are not just an exhibitor of the film, but a distributor of the film. So we're going to get a cut of that. And of course, we've got the annual shareholder meeting. Anything can happen, so get ready. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.